Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, as well as our co-host, Skyline Corporate Communications Group, we're very pleased you joined us for our next live presentation from Valeura Energy, an upstream oil and gas company with assets in Thailand and Turkey. Please note you can submit questions in the box to the left of the slides for our speaker, and you can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Sean Guest. He's the President and Chief Executive Officer of Valeura Energy, which trades on the OTC markets under the symbol VLERF and on the TSX under the symbol VLE. Welcome, Sean.
Thank you very much, John. It's a pleasure to be here this morning, and thank you to everyone for joining us here today. So Valeura Energy has been on the main board of the Toronto Stock Exchange since it was founded back in 2010. Now, we are going through a process. We've been on OTC, but on Pink, but we're just going through our process now to finalize our application there to be trading on OTCQX, which we really hope to be coming in the next couple of weeks or into August in that time period. So just the disclaimer slide. Now again, obviously I'm not going to go through this, but this presentation is available on our website and you're welcome to download it at any time and have a look through there and reach out to us at IR with any questions you may have. So really starting to get into the meat of it. So just waiting for the next slide to pop up. Okay, just looking at that next slide. 2022 is a very transformative year for Valeura. We completed 2 acquisitions during that year in the Gulf of Thailand. And with those 2 acquisitions, it really drove us to almost a 400% increase in share price in 2022. And that really, out of the 121 companies on the TSX main board and the TSXV, that really had us as number 2 there. And we really see that continuing into 2023, where we're still in the top quartile of our peers. Now, the key thing that's happened with those acquisitions is we're now a cash flowing company. We have 4 separate producing fields in the Gulf of Thailand. We're producing over 20,000 barrels a day. Last quarter is 22,000 barrels a day. And we're getting Brent oil pricing for that, which is about $80 a barrel currently US. And the other thing to point at this time is that with these acquisitions just having taken place, we're still trading at a significant discount to our peers and to our book value as we get from our reserves auditor out to Dallas. So the point is we've taken the company from what was really a small amount of cash, $30 to $40 million in cash, 1 asset in Turkey, which was in an appraisal phase, and now we're a cash flowing company with cash flow into the future. And the other key point is we're now well established in the Southeast Asia with a track record of success and a team that can do this again. Sorry, that slide just popped back when I said next there. Robin, maybe if you have control there, if you could move the slides, it seems to be behaving slowly. Yeah, thank you. So the team that we've got, myself, I've only worked international oil and gas for my career, started with the majors, Shell, Woodside, around different places around the world. But the majority of my career has been spent in Southeast Asia. I ran a private oil and gas company with about a $1 billion enterprise value for one of the richest men in Malaysia and have a lot of contacts throughout Asia. And really to work in the region, that's what you need. Now our CFO, Yassine Ben Miriam, he's an investment banker who's been in Singapore for his career and has done a lot of the energy deals in Southeast Asia. He's actually been key to the 2 deals that we created, that we actually concluded last year, and is now a solid part of the team as we go forward. Kelvin Tang is Singaporean, lawyer by background, and he's been intimately involved in the assets we acquired, even back from the time they were originally discovered and developed, and therefore has a very strong working experience of Thailand, as well as doing new business around the region. And the last person I note there is Dr. Ian Warlow. Ian and I had similar careers and overlapped in Shell and Woodside internationally. But importantly, he spent really the past decade working for Mubadala, who we acquired the main asset from, and was in fact in the team that we acquired. So he's very known to the regulator, to the team, and to the other companies within Thailand. So he's got that strong operating experience in country as he now looks after the assets we've acquired. And the rest of us have that experience around Southeast Asia, running companies as well as doing new business around the region. Can I have the next slide? Thank you. So looking at the two acquisitions that we did in 2022, now these took us from no presence in the region to essentially when we concluded the deal, we were the second largest oil producer in Thailand after only the national oil company. The map on the right shows the Gulf of Thailand, where all the assets are. And just to give you an idea, the red there are existing gas fields, the green are existing oil fields, and the yellow are the blocks that we now currently operate. Now, the Gulf of Thailand has been really a heartland for companies like Unocal. They really cut their teeth in this area, really developed this portfolio. And in part, that was likely one of the reasons that Chevron then took over Unocal to gain these assets. And Chevron remained there, is still one of the main producers in the region. So the two assets we went after and then acquired in 2022. The first one was Chris Energy, a company that was in receivership. So you had a highly motivated receiver to try and do that deal. Now they had a good asset in the Wassana oil field there, which was suspended at the time. But importantly, the company also had about $250 million in tax losses. So we were able to acquire that quite cheaply and then restarted that field a couple of months ago. The second more important acquisition was buying all of the oil assets in the Gulf of Thailand from Valeura Energy. And for those who aren't aware of Mubadala, Mubadala is actually the sovereign wealth fund of Abu Dhabi and therefore very rich. But what we had strategically there was they were looking to actually exit out of oil, transition from Mubadala Petroleum to Valeura Energy, and were looking to offload their oil portfolio. And for that reason, we were able to acquire that quite inexpensively at $10 million to acquire over 20,000 barrels a day of production. And in fact, given that the effective date of the deal was September 1st, 22, when we closed this deal in March 23, there was already $105 million in working capital. So while the two companies we were acquiring here had a lot of synergies and the assets were similar, operating conditions are very similar, there's also bringing together significant tax losses in one company with significant revenue generation in another one. Now the assets are shown down at the bottom there. You'll note that we have very high interest in all of the fields, and in fact, we operate all of these fields, so we have control. Jasmine Field is one of the older fields, but is still one of the most significant producers. Nong Yao Field is in a growth phase, and we still see much more development to take place there. The Menorah Field, which is one of the smaller producers, but of interest there is this was supposed to have been abandoned in 22, and in fact, that field's had its life extended, and instead of being abandoned last year, we now see that field extending out to at least 2025. And then the other field being the Wassana field. Thanks. I can jump forward to the next slide, Robin. So looking at the share price growth from taking at the left-hand slide of there of 2022, you can see that we had some increase in value there when we announced the Chris Energy deal and closed that. But the main thing was the recognition of the acquisition of the Mubadala assets, which gave us a large jump in share price in December 22. And then again, when we closed that deal, we jumped up. Now, the share price has slid off a bit since then. You'd had a kind of a fall off in the oil price, a bit of negative sentiment in the market. So we still see that we're trading, relative to our peers, quite low at this time. But really, you can see in the box at the left how transformative this was for the company to really go from N21 with no production to now over 22,000 barrels a day, Our revenue projections for this year are approximately $600 million US. And then when we closed the deal, there was significant cash in the company at that time. Okay, so currently we're at a market cap of about 150, but with the cash in the company, our enterprise value is only about $90 million US. And the value we have from our reserves auditor is about $270 million. So just taking that into account, like we're currently trading at only 1/3 of the value from our external reserves auditor. So looking at 23, where we put guidance out after we closed the deal in April. So we expect to average about 21,000 barrels a day of production. And again, I'll emphasize the pricing that we're getting is about Brent oil pricing. Now, the CapEx for this year is higher than we would normally expect for these assets, and that's because we have 2 growth projects planned for this year. We restarted the Wassana field. It's actually currently suspended, but we're planning to go into drilling on that field, and we expect to take that field from where it was doing about 2,400 barrels a day last month, up to by the end of the year, we expect that to be doing over 5,000 barrels a day. More importantly was the Nong Yao field that I mentioned, where we're going to install a 3rd platform on that field. That work will start in Q4 this year, and we expect that field to come on, really increasing its production from about 7,000 barrels a day this year to over 11,000 barrels a day next year. So when we look at this and we look at really, about a year from now and look at Q2 next year, we'll have completed 2 growth projects to increase the production. And at the same time, we should have completed the corporate restructuring to really optimize our tax situation. And that'll really look forward to us creating very significant cash flows in that year. The other key point I'll note is that, again, looking at 23 is we are looking at bringing these companies together and then looking at that corporate restructuring. So we see a number of synergies as we bring the companies together. Next slide. And just really highlighting on this slide what it's showing is our production. So for 23, we see a minor increase in production from what it was from the beginning of the year. But 24, we're looking at quite a significant increase there, above 25,000 barrels a day. And again, that should be with very strong cash flow. The other point to note here is that really with these assets is a lot of them are mid to late life. The objective here is really to maintain them at about that level of production. The reserves numbers that we have always show that these fields are going to decline and come near abandonment 3 to 5 years out. So what we're really looking for with an activity level is to really extend that production and push that abandonment out. Next slide. And this is one thing that's very special in the Gulf of Thailand. It's a very prolific basin. We can see there it's produced more than 10 billion barrels of oil or oil equivalent. But the real interesting thing is that you have multiple layers that tend to be full of oil and then multiple traps laterally. And what this means is you can actually initially discover oil that can be quite small. You develop that at quite a reasonable cost, but then you can continue to grow that over time and just keep adding to the field and adding reserves very inexpensively. And the chart that's shown in the bottom right there is the Jasmine oil field. Now, when this field was discovered and first brought online in 2005, the reserves auditor gave it 7 million barrels recoverable. Now here we are, 16 years later. We announced last month that that field had produced its 90th million barrels, and there's still more reserves in the field now than there was when it first came on. And this isn't anything special or anything magic. It's just that you just keep drilling a little further out, longer reach wells, put in a new platform, and keep adding oil. And it's therefore very efficient and very sustainable. You're using the same infrastructure that exists, which has already been invested in, and continuing to add oil. And this is why companies such as Coastal, an American company that worked here a number of years ago, smaller company, were able to grow their production to quite a significant level. And I think in the end, they were sold for about $2 billion. So it's a very good working environment. Drilling costs, even though you're offshore, are very inexpensive. It's really cookie cutter because you've got the same water depth, the same geology. So your cost to drill, your cost to develop are quite inexpensive, and you're really just repeating what's been done before. But that main message is you can continue to drill each year and replace the reserves that you're producing. So if I could have the next slide. And this is what we've really tried to show on this slide and make clear. And what we're showing is this is going back to 2017. And this is the public data that's available on the reserves that existed at the end of each one of those years. The blue bars are the proven reserves. So not the probable that you'd normally look to, but the much more conservative proven reserve. The red bars are then the amount of production that you had every year. And what the chart's showing is that the reserves are remaining largely stable each year, even though you're producing almost half of them. So what's happening with the drilling that you're doing each year, you're able to fully replace the amount of reserves that you're producing. And when we first showed this chart at the end of 22, we didn't have the numbers for 22, and the numbers there are very similar. So you can now see that we've had another year. And the message you should be taking away from this is that when we get our external reserve report done by NSAI in Dallas, they come up with 270 million in value. And yet that number hasn't changed since 2017 because each year you continue to add to those reserves. And that's the key point I'm trying to show on this is that we have that strong cash flow now. We see the ability to continue to replace those reserves and have that strong cash flow into the future. And with that cash flow, we can then look at whether it's reinvestment into the assets, whether it's looking at acquiring new assets, or whether we're looking to return or redeploy some of that back to shareholders at that time, depending on the deals available to us. And that's really the message to kind of leave it at here is very strong cash flows, and we see these cash flows continuing into the near future. Okay, next slide. Thanks. So looking at those cash flows, it's then a matter of looking at what are the next steps in growth for the company. And as I kind of said in the first slide, we really looked at areas where we had a strategic advantage. The KrisEnergy was a receivership, motivated seller. We also saw the energy transition, where major companies were looking to offload their oil assets, and we were able to acquire those very cheaply. Now, some of that has changed, and a lot of you might have noted that companies like Shell and BP, who a few years ago were saying that they were getting out of oil, are now talking about not reducing that anymore. But we still see opportunities in Southeast Asia on materiality levels. A number of the majors are still pulling back from the region as they don't see the material assets there. But these are still assets that are extremely material for someone of our size. Now, why Southeast Asia? Well, obviously our team has the experience there. They're very prolific hydrocarbon basins. But one of the key things for me is that when I'm here in Bangkok and I can take a 5-hour plane ride, with that 5-hour plane ride, I can capture half the world's population. Half the world's population are here in Asia, and they're energy starved. And when you read the reports out of the IEA, the International Energy Agency, what they really see is they still see strong growth in oil and gas demand in Asia. And over the next number of decades, it's going to remain here. So we see the demand being here, and we see that we're well placed still to go in here with the right team to pick up these assets and deliver into this region. So we're well positioned to deliver more growth. And we've shown in 2022 that we could do this with these assets and return the growth to our shareholders. Okay, thank you. Next slide. So obviously, as an oil and gas producing company, ESG still is a very strong focus for us. Having taken these over and now being operator of these assets, we've really set targets this year. We will go through a full measurement of the emissions baseline on all of these and put out our sustainability and our first sustainability report next year. The team are already, since we've taken over, starting to look at areas where we can reduce the emission from these fields. On the social aspect, What's very important to us here is that you have an extremely skilled workforce in Thailand who've been producing oil and gas for decades, working for companies like Chevron, Unocal, and other majors in the region. The team that we have there, which is just over 200 people staff now, we really have about 4 or 5 expats in that company. You have a really strong local team, and you're building on those local resources and those local connections. And then finally, on the governance aspect, what's very important is myself, having worked for major companies like Shell and that around the world, we bring that level of governance and that responsibility to the company. Okay, next slide. Just before I kind of start to bring the slides to conclusion, we still do have a very tight, deep gas play in Turkey. This was a play that Statoil, now Equinor, farmed into in 2017. We drilled 3 wells with them, some up to 20 kilometers apart. We found a significant amount of gas, and we were able to flow that gas from all zones, but at that time did not achieve what would you say was a economically sustainable flow or find the right sweet spot. We still hold these assets. Equinor made the decision to exit around the start of COVID. We have these, but we are looking for a partner to come in as they are drilling very deep wells. But it's a significant gas play right on Europe's doorstep in the right region. But we're really looking to bring in another partner first before going into appraisal of this. Next slide. So we've gone through really, in 2022, we signed and then closed the KrisEnergy deal. We did that Mubadala acquisition in December 22, and then managed to close that in 23. Very quickly, we came out with our guidance for 2023. We then restarted the Wassana production, but we've had a continuous drilling program going on the other fields, which is really at times increasing the production of those fields, and will add to reserves in those fields. Now, the Q1 results came out in May, but for us, this was really a balance sheet issue and really showed the assets that we had, which we jumped up to almost 900 million in assets. But still, having closed that deal right at the end of March, there was no production in that period. So what's really important now is when we get our Q2 results out, which would be the second week of August, that'll be the first time we'll be able to show people the actual production that we've had and the revenues. But we did do an announcement last week where we showed that we still had 120 million in cash. We'd paid down more debt in the period, and it was recognized as a good quarter, even though we'd seen lower oil prices. So as you go through 23, that's a real focus item, is to demonstrate to the market with those Q2 results the cash flow we're getting from these. We then will start the Wassana drilling in probably around the end of this month, early August. And more importantly, then we'll get onto that Nong Yao expansion and that new facility installation in Q4, with that field coming on stream then in Q1 next year. And really looking for that focus of, a peak production in Q2 next year. One issue we did have is we announced a week ago that we have temporarily shut in the Wassana field. One of our contractors, that we were not comfortable with the level of their focus on health safety, and we've really had to stop work while we go through and evaluate that and try and up the quality of their work. Next slide. Okay, so kind of bringing it to a conclusion then, is that really emphasizing again, this is about cash flow. Cash flow that's linked to Brent oil prices here, and we see that cash flow continuing into the future. We have other opportunities in Thailand where we're looking for further growth, but we're also looking for more material acquisition around the region. Additionally, with the cash flow that we're now starting to generate, this year we're really looking at building up a strong cash base, but then as we get into 24, we can see that the board will likely look at a dividend policy and whether it's time to look at returning some of that cash back to shareholders. So at that point, just emphasizing again, compared to our peers, we still don't think the market has fully figured out the value of the magnitude of the transformation the company has gone through. And it's a very good time to kind of come into the share price this time as we first deliver the value and the cash flow in Thailand, and then look beyond that at the next deals. So at that point, I'll conclude the presentation there, and thank you for listening. So going over to the questions now. Yeah, had one question which related to, could we get an update on the status of the Wassana field that we shut in? As I kind of noted there, it really is about, there was no damage to facilities or issues. It was, from our point of view, it was prudent with one of our contractors. We were not happy with the quality of their work and their oversight, and we're looking at working with them to kind of put in place better management and better processes that before we restart. And you know, we should have updates on that as we get closer to our board meeting. A question on the corporate restructuring that's ongoing, which would then allow us to really optimize our tax uses. We see that as taking really through this year. It's something we've kind of believed that we'll be going into 24. It'll be at that time that we'll have restructured the companies. And it's really, a lot of it is, you know, we've picked up multiple companies in multiple jurisdictions, and it's really cleaning this whole structure up to try and make it work the most efficient way that we can. A question regarding the Turkey assets. Do you feel Valeura was in a poor bargaining position 1 to 2 years ago when looking for a partner, and are in a better position today with the cash flow? Were there any deals turned down, VLE, in that 1 to 2 years? And no, honestly, there weren't any deals that were turned down. We had a number of very significant companies who were in looking at that. It was obviously a very good time to be looking for gas that can be fed into either Turkey or into the European market. What I can say, though, is that at that time, we were definitely looking for a partner that was coming in who was going to be carrying us, and that was pretty clear. With the cash flow we have now, we don't necessarily have to do that type of deal. We could be able to fund some of the well ourselves, another appraisal well in that gas play, and then look for a carry from someone as we go forward. But still, at this point, with 100% working interest across most of that block, we're really looking to make sure we're partnered up on that, as these are very deep, high-pressure gas wells. A question of, when do you think you will have to start decommissioning the first Thai assets, and which one do you think that will be? And that's a really interesting question, because when we were doing the bidding for these assets starting in 2021, as I noted, the Manora field was supposed to have been abandoned in 22. It was supposed to have been abandoned about a year ago. But the increase in the oil price, the field producing better than they'd expected, caused the operator at that time, Mubadala, to drill 2 new wells on that field, which actually increased the production even more, pushed the abandonment out to 2025. And now we actually have the rig on site drilling 3 new wells on that field now, which we hope will increase the production further and hopefully even push that abandonment out further. So look, we still believe that we're going to continue to push that abandonment out, with Manora being really a prime example of just in 1 year taking it from 22 to 25, and we believe we can push it out even further now. A question, is a big share buyback an option if the share price stays at these levels? Look, at this point, we are not looking at a share buyback. It is something that has been discussed with the board. We have a board meeting in a couple of weeks, and these things are reviewed at that time. We do think that the share price is undervalued. But again, at this point in time, what we're really trying to do is build some of the cash into the company to then give us much more flexibility as to whether it's in growth or whether it's returned to shareholders as we get into 2024. So at this point, we're not looking at a big share buyback. We have even seen a few other companies who've had issues by going into that and then finding themselves running short of cash in the current market, and we don't want to fall into that situation. Okay, and just checking, I think we might be coming just to the end of our time here. So at this point, again, I'd like to thank everyone for listening in today. And please feel free to check our website and reach out to Robin in our IR department or myself.